Hello, this is James Smith at GannAnalysis.net. Today I want to talk about 144. You know 144 is both a Fibonacci and a Gann number. It is important. It's perhaps one of the most important numbers you can use when you're doing trading counts or calendared counts. You want to know that this number is the one you need to count from every high and every low. So, for example, Dow, February 12th was the high, 143 days. Okay, close enough. It was off by a day. 143 trading days, high to high, into September 3rd. And from the low of March 23rd to the high, within a few days, was mid-October, 144 trading days, and you can see what happened after that. So keep in mind there's another way to do it. You can look backward in time to see if the same cycle is calling turns backward. So you can scroll back and see, oh, okay, it looks like it worked a few times. That helps you confirm that it's going to be a big turn. So if you have a cycle that you see, okay, I'm counting up from low, I want to see if that works backwards, then you just count backwards and see, oh, okay, look at that. End of August 2019 was a low, and so it works both forwards and backwards. You want to test it, in other words, to see how well the particular cycle is working. In this case, we know 144 is going to work quite often, but it's still worth your effort to test it going back in time to see whether or not this one is going to work. And that's what I did. I told that to clients before the event that, hey, this is likely to be a high. When you go down, it's going to get ugly. Now, does it only work on the Dow? No, in fact, if you look here, from this low in November 2008 to a possible high in November 2020 is 144 months. So it doesn't just work on the daily time frame. It doesn't just work on the Dow. It also works on any other market you can come up with. And if you have a parabolic move going into the turn, so much the better. The more overbought or oversold you are going into an important cycle, the more likely you are to get a big turn. It seems reasonable. So notice that this correction started a month or two prior to the actual count. So we got the high in early September, and then, tech stocks have been selling off the last few months. But what Gann said, before the 144 month cycle, 144 count comes due, you should look to the month prior. If it's starting to show weakness, then it's working. So you don't have to be, do not make the perfect the enemy of the good. If you're religious about it and you say, well, you said it was going to rally into November. No. I've been telling clients September, October to start looking for weakness, because the reality is 144 month cycle, if you're off by a couple of months, it's like the same thing as being off by a couple of days on a daily count. So if it's 142 months instead of 144, good enough. You should know that this is going to be a big deal. So if the Nasdaq's going to crash, if this really is a bubble, where's it going to go? Well, if it takes out this parabolic curve, it could get rather ugly. So that's going to be interesting to watch. And think about it this way. If tech stocks crash, they'll take down the S&P, they'll take down the Dow. So maybe that explains why this count is going to work, on the Dow. It also explains why maybe the dollar is going to crash, because you can see here 144 months low to high, and we've been selling off hard. We're rallying here lately, but I think this is a reaction rally. You still got more downside. Why would the dollar sell off? Well, obviously because the Fed is going to print money in response to the Nasdaq crashing. They're just going to print until the cows come home. 5, 10, 20, 30 trillion dollars of a balance sheet going to 40. Who knows? We know the Fed will respond. They will overdo it as they always do. And guess what? The dollar will get weaker, but they're not too worried about that. They'd like to see more inflation. So they will get it. But be careful what you wish for, Mr. Fed. If the dollar crashes, this is going to get ugly. I've shown this chart before. 144 months up from low. Also a 180-month cycle. Just over 24 months, 60 months. A lot of cycles gave you the top here. You took out the 50% retracement, the most important retracement for Gann. And if you rally back to it, that sets up the next leg down. You don't have to get back here, but if you did, that would be a great place to look to short it with the stop just above it. But the reality is that this is probably going down further. You know, you could easily go down to 89, 83, or even lower. Now, if the dollar is going to sell off that much, what's the Fed do with all that money that they're printing? Well, obviously, they're going to support the bond market. They're going to be buying bonds like crazy. So maybe you're okay to buy bonds. Maybe that's the safe haven. If stocks sell off, normally people go to bonds. But maybe not. If you look at this chart, look here. From a start of December 2008 to December 2020 is what? Bingo, 144 months. Low to low. So initially you might get a rally in bonds sending the yield down into the 144-month cycle into December. But watch out thereafter. Guess what? 144-month cycle, it works on stocks. It works on the dollar. It works on bonds. Are you getting the point? The 144 cycle works on everything. And it's not just monthly, but, 144 days, weeks, months. You got to look at all time frames. But this is killer. I don't think people are going to be ready for this. This is going to be very interesting. 144 months. If this plays out the way I expect, if you see, in November, if you see tech stocks crash and the Fed prints money, the dollar starts to sell off, but they're supporting bonds. So initially bonds rally because, safe haven, boom, guess what? Bonds rally here. Maybe they make a new low in yield terms. And then by December, something else happens. Something that nobody could have predicted if you're a fundamentalist. But if you're a technician, especially a Gann technician, you would say 144 months is a big cycle. I got to watch this for a possible turn. So I'm just saying 144 is the most important cycle you can look at. Daily, weekly, monthly. You should be drawing 144 counts from all time frames on all markets. And you're saying, well, wait a second. Forex, bonds, stocks. You didn't mention commodities. Oh, bingo. 144, low to high. Now, if you were trading gold back in the day and you saw that it rallied into high 144 months, low to high, this is all great because technicians do this all the time. They show you stuff that's already happened. They don't show you stuff that's going into the future. They tell you with 2020 hindsight, oh, look at this, 144. Well, in actual fact, my clients have been with me for over 20 years. They know that I called their attention to this as it was happening at the very moment. In late August, I told them, beware, there's probably a high forming here for gold. And 144-month cycle into September, low to high. From the low of 1999, September 1999 to September 2011 is 12 years, 144 months. And you got a pretty nasty correction. Now, I'm not going to tell you what's coming up next, but you can probably guess. But nevertheless, I'm telling you 144 works in the past. It also works going forward. I have a lot of interesting charts to show you. If you're interested, sign up to my website, www.gannanalysis.net. Register, you get some free charts, more detailed reports than what you see here, but you also get a chance to subscribe. And that's up to you. Look at the free reports, see if you like it. If you like it, I have a 3-month trial subscription that I think you'll find quite useful. And one thing I do that most other people do not do, I show you my reports going back years. Like I said, I've been doing this for a while, over 20 years. So if you want to see what I said in past years, it's all there. I do not filter it. I show you the actual reports that I sent out. If you subscribe, you can actually go through it and painstakingly prove good or bad if I got things right or if I got it wrong. So it's up to you. A lot of people say, well, show me your track record, show me this. I'm not going to waste my time. I'm going to tell you, if you're interested enough, you can prove it to yourself. You can go through my reports that I have collected over the years, and you can prove to yourself whether Gann works or whether it doesn't. And you can see whether I'm good at it or not. It's up to you. But I don't need to prove it to myself. I know it works. I don't need to prove it to my clients. They know it works. You don't know it works. That's why you take a 3-month trial subscription. You check it out. If it doesn't meet your satisfaction, then boom, you're done. Limited obligation. Check it out. You learn a lot about Gann. You see whether it works or it doesn't work. Does it work on your market or in your stock? It works on everything. But maybe you're skeptical. Prove it to yourself. Invest a little time and effort. I'm telling you, your time is going to be well spent to learn a little bit about Gann. And the 3-month is sort of a testing phase where you can learn a whole lot in a very small amount of time and prove to yourself once and for all, does this stuff really work? Well, most people aren't going to show you what they wrote years ago. I do. So if you subscribe, that's what you get. And that's quite valuable in and of itself, but you also get every current report, any new reports that are coming out, and you'll know before other people do exactly what's going to happen going forward. So no system is perfect. I get some calls wrong. Everybody does. But I'm just saying, Gann is the best methodology that I've ever come across. And I've studied Fibonacci. I've studied Elliott wave. I've studied momentum indicators, a whole range of things that everyone likes to look at as chartists, market profile. I've never come across anything like Gann. So I've been doing this since the mid-90s, and it's hard to believe that much time has gone by. But I still like it. Every day I get excited about looking at the Gann charts, and I hope you will too. Thanks a lot for your time.